Welcome back. Let's talk markets. Manish Jain from Centrum is now with us on the show. Manish, in your last conversation, you said that you will use corrections in the market to, use that as an opportunity to build your position in stocks and sectors that you like. Well, we've had a correction, particularly in the last 1 week. So what has been the portfolio approach?
We had been creating cash in the period leading up to the correction, and yesterday we actually have started buying. We bought a little bit yesterday, about 1/4 of what we wanted to buy. We are again out shopping in the market today. I don't think this correction that has happened is something that I'm overtly worried about. It's not something that is, going to make me lose sleep. I think this is very healthy. This is something that was warranted a little bit of pullback. At the individual stock levels and sector levels, there are many opportunities that have emerged out where, we've seen 20-30% correction also, where we fundamentally continue to believe in the story. And those are the stocks where we have kind of, shopped a little bit. So the strategy is not to look at fresh ideas at this moment, but the strategy is very simple, which is to look at the existing portfolio and realign the weights in an optimal manner where wherever the valuations were expensive, we've kind of exited that out. We've created about 10% cash in the portfolio in the days leading up to this correction. And yesterday we deployed a little bit and today again a little bit, and we'll continue to do that.
So you don't anticipate a bigger, deeper correction at current levels. You would be comfortable deploying the entire 10% cash that you had accumulated in your portfolio?
Yeah, by and large, because fundamentals continue to remain strong as far as India is concerned. So it's not something that overtly worries me when you look at, the GDP growth rate, the budget, the earnings growth, and in the fundamentally the sector biases that we had, which was on auto, pharma, IT, that continues to remain. And that's the space where we are looking at. And as long as the business fundamentals continue to remain strong, there are enough opportunities in large, mid, and small cap across the board where you can pick up. Because one thing that people forget is that it's not about taking a very top-down approach at this juncture. When people make a statement saying that markets are expensive, I kind of disagree a little bit with it, because the rally has been anything but homogeneous. Within sectors also, if you look at individual names, then the divergence in performance over a 1, 2, 3 or whatever time frame you want to take has been very, very divergent. So there are pockets of value which still continues to exist despite the indices rallying as much as they have.
So in IT particularly, because very soon, in less than a month, we will have the Q4 FY23 earnings fine print from the IT majors and even the guidance for FY25. Where is it that you see value?
So I think there are two things that make me very excited about IT, particularly on the large cap side. I think number one is the fact that valuations are fundamentally very, very inexpensive. Now, you can't compare today's valuation to 10-year period. It doesn't hold true. But if you look at a 3 to 5 year period, then there is value which emerges in large cap IT between 20 to 25x multiple. That's one thing that has me excited. And the second thing, which is very simple, is that when I look at last quarter's result, the margins have clearly bottomed out. When you look at the utilization levels, when you look at the net additions, when you look at the employee cost, I think from all perspectives, the determination to improve margins and utilization levels from here seems to be pretty much on the cards. What's icing on the cake is the fact that US economy seems to be stable now, seems to continue to be doing well. And that's something that, combination of all these three factors has really had me shopping for IT at this juncture. I mean, you can't really time it to perfection, but the fact of the matter, it looks like as if we have bottomed out as far as IT results and earnings pressure is concerned.
And in IT, is it the large caps? Is it the small caps? Is it the ER&D players? Where is it that where you think things have bottomed out?
So right now we are looking more favorably towards large cap versus mid cap IT, because mid cap IT on a relative basis does seem to be a little more expensive, has been running ahead of the earnings curve. So that's something that we already have played it out. But within the portfolio also, I think we are incrementally shifting more weight and more focus towards large cap IT at this moment.
Got that. What about this oil marketing companies? They've had the last 2-3 quarters have been very strong in terms of the kind of GRM spread. Now we've got a token price cut of about 2 rupees, and very soon the code of conduct will kick in, which gives you a sense that perhaps there are no more price cuts. So that overhang is out of the way. Thoughts on oil marketing companies? Is that something that you are shopping? Is it on your buy list?
So that's not an area that we typically try and venture into. So that's an area we kind of try and stay away from, because there are so many moving parts. Like you very rightly said, there is government intervention, then there are international geopolitical situations, the currency. I think so many multiplicity of factors that kick in. And given the fact that our aim in Centrum is to create a steady growth portfolio where volatility is going to be less, I think we deliberately try and stay away from these sectors. If at all we want to play cyclicals, I think we try and do it from more long cycle products, like for example, real estate, like for example, autos. Those are the areas where we kind of try and focus more on, rather than these short-term, short cycle businesses, which can be really, really volatile. For example, metal, mining, or oil and gas.
Okay, Manish, finally, just leave us with the overall portfolio construct and call in terms of your most liked themes or the biggest overweights, your high conviction bets now.
So among the largest sectors, it's basically IT, auto, pharma. That's what we like. Within the BFSI sector, we have been cutting weight between banks and NBFCs. I think we prefer NBFCs at this juncture more than banks. And among the smaller sectors, I think real estate is something that we have a very massive overweight position on. And we do believe that we are at the midpoint of the cycle, nowhere close to being at the peak of the cycle. So it's still something which is going to create wealth for the investors for at least 1.5 more years to come.
Okay, Manish, we leave the conversation here for now. In our next conversation, we'll ask you how you're playing this real estate. Is it going to be through the ancillaries or even the geographical spread of the real estate companies? Thank you for joining in. Need to get into a break. We'll come back.